Peter Thiel saved $1 billion by just changing his address. You might not be a billionaire, but there's a lesson here that could save you thousands. I've helped millions improve their finances, and I'll show you what this story really means for your money. California proposed something unprecedented for residents worth $1 billion or more, a one-time wealth tax of 5% of their total net worth, payable at 1% annually over 5 years. The tax targets roughly 200 people and expects to raise $100 billion over 5 years, which is $20 billion every year. Here's the backstory. Despite high state income taxes, California billionaires have avoided most income tax for decades by simply not selling their assets. For example, Mark Zuckerberg doesn't pay California income tax on his Meta shares as long as he doesn't sell them. The new tax undermines this strategy because it is not income tax, it's a wealth tax. It doesn't care whether they sold anything. It hits everything they own: publicly traded stocks, private business stakes, and worldwide assets. Now here's what makes this devious. The proposal appeared in December 2025 with an effective date of January 1st, 2026. California did this on purpose. If they had set the date to, say, November 2026, all 200 billionaires could have moved out in time and saved tens of millions each. But changing your tax residency isn't as simple as buying a house in Florida and calling it a day. Proving you actually moved takes months. You need documentation showing you intended to leave California indefinitely and permanently. That's why the January 1st deadline was a masterstroke. By the time most billionaires heard about this proposal, the ship had already sailed. Peter Thiel made headlines when he announced on December 31st, 2025 that he was no longer a California resident. He called Florida his new home since he had maintained a personal residence in Miami since 2020 and also opened an office for his venture capital firm in 2021. His estimated net worth is over $20 billion. By proving he changed his residency a day before the deadline, he saved himself at least $1 billion. But not everyone is leaving. Jensen Huang, the CEO of NVIDIA, says he's perfectly fine with paying the tax. He said he hasn't thought about leaving even once. His wealth is tied to Silicon Valley in a way that's hard to replicate anywhere else. So for him, the tax is just the cost of staying in California's strategic tech ecosystem. Irrespective of their decisions, here's what's universal. Every single one of these billionaires did the math. They compared the cost of staying versus leaving, factored in the hassle of moving their families and businesses, and made their decision. We may not be billionaires, but the lesson applies to all of us. We face the same calculations, just on a much smaller scale. Tax codes change every few years, impacting your investments and retirement planning. So your strategy from 5 years ago might cost you money today if you don't update it. Unlike billionaires, you don't need a team of accountants and lawyers to stay ahead of these changes. Just keep track of changes that affect your taxes, like credits, deductions, phase-outs, contribution limits, and updates to state tax policies, and adjust your investments accordingly. That's how you avoid paying more than you have to, just like billionaires. But no matter how much you save in taxes, you're still probably losing hundreds of thousands of dollars to this easily avoidable mistake. Watch this video to fix it and skyrocket your wealth.